And maybe some other people will trickle in the next few minutes. But who would like to kick off with the first question?
For chapter 2, homework 25.
Say that again, Brandy.
Chapter 2 homework number 25.
25 on the chapter 2 homework. Okay. I'm going to share my screen. Then I'm going to navigate out there so we can take a look at that. All right. I'm also going to paste this out in Excel so we can actually look at it. No, maybe not. Well, we'll look at it here and we'll talk about it, see how that goes. So 25 says, Spencer applies overhead to production at a predetermined rate of 80% of direct labor cost. Job 130, the only job still in process at the end of August, has been charged with overhead of $5,000. What was the amount of direct materials charged to job 130, assuming the balance in work in process is $20,000? Okay. So, actually, I need to do this on a scratch pad so we can actually do some work with it here. Let me see if I can get this to... Oops. Okay, so our predetermined rate is 80% of direct labor. Guess this will have to do. We had overhead of $5,000 that's been charged to this job in question. We had total work in process of $20,000, and we're looking for the direct materials associated with that. Okay, so the question is, what total product cost would be included in this work in process amount of $20,000? Right, all of our product costs fall into 3 buckets, right? Direct materials, direct labor, and manufacturing overhead. So the total of all those 3 for this job, right, is $20,000. So far, so good. So if we know that overhead was $5,000 of that $20,000, how can we determine what direct labor is?
You got to solve for manufacturing.
Yeah, we already solved for overhead, right? They told us it was $5,000. So how can we take that $5,000, knowing what we know about our overhead application rate, and figure out what our direct labor must have been?
Oh, I see. All right. So you would take your direct labor and divide it by 0.8.
Yeah. So our overhead must have been $6,250. Okay. Because again, we're applying overhead at the rate of 80% of direct labor cost. And we knew that we had already applied overhead for $5,000. So that must have been 80% of our direct labor of $6,250. Okay. So if we know overhead's $5,000, we know labor's $6,250, what must direct materials have been?
Whatever's left, they give you 20,000.
Yeah, so the 20,000 total for that job minus the labor of 6,250 minus the 5,000 in overhead, or 8750.
Now, are these the kinds of questions we'll see on the exam? I presume yes.
Yeah, they may look and feel a little different. The exam tend to be kind of longer problems that give you a chance to kind of work out start to finish some of these types of things. But the concepts are identical.
Gotcha. Okay.
Everyone okay on that one?
Yeah.
I have a question.
Okay.
I'm confused again. You said that the 6250 is 80%. The $5,000 is 80% of the 6250.
That's right.
Okay, but how did you get that number again? Because I got lost right there.
The 6250 itself?
Yes.
Yeah, so if we know that 5,000 is 80% of direct labor,
Mm-hmm.
what we're saying there is MO, well, I'll just represent that as the 5,000, equals 80% times direct labor, right? So if we divide both sides of that by 80%, we can come up with our direct labor, right? So 5,000 over here divided by my 80%. The 80% over here cancel out, and I'm left with just my direct labor on that side. So 5,000 divided by 80% was our 6,250. That must be my direct labor cost.
Okay. Okay, thank you.
Sure. Okay, if there are no other questions there on that one, I can take another question here.
Yeah, I've got one here. It's not a problem. It's a little more general, but I'm looking at the notes on Chapter 2, and these slides are not numbered, so I'll just sort of ask a general question. But it talks about on one of your bullets here that the WIP, or work in process account, is a control account because it summarizes the detail from the job cost sheets. But the WIP account never really goes to zero. Yet, is that really a requirement of a control account, or just a lot of control accounts move to zero? Because WIP really wouldn't, correct?
Correct. So work in process is a permanent account in the sense that you can see it on the balance sheet.
Right.
So it's not necessary that a control account will hit zero. It's just our manufacturing control accounts tend to do that.
Gotcha.
And I probably shouldn't make that generalization, which I think in your Blackboard post I may have, Terry. Yeah, but it's not a requirement.
Gotcha. Okay, so many control accounts do go to zero.
Yeah.
Close to the period, but WIP, not necessarily.
Yeah, and I don't even really like to think of those accounts as control, only because they we're talking about asset accounts there, so they can serve a control function in terms of tracking costs. But I tend to prefer to think of them just as their fundamental type, and in the case of WIP, that's asset, right?
Gotcha. Okay. Makes sense. Okay. Here's another one for you. On the exam, do we see a lot of problems dealing with the weaving in the FIFO analysis? I mean, that can get pretty complicated if you're trying to sort, first in, first out, and then assign some of the costs based upon, changing the cost of widget A in May, but widget B was a little more expensive in June, and trying to figure that out. Will it get that detailed, or are we going to pretty much stick to a weighted average cost?
Yeah, are you referring to a certain type of examples we did as part of something, or just in general?
Just in general. There was some discussion of that at the end of Chapter 3.
Yeah.
Which got a little bit granular. I think sort of what the authors talked about is, it's kind of difficult to do that, and in many cases, the effort to sort of sort that out or do that analysis is probably not worth the cost difference as opposed to a weighted cost average. So
Yeah, I'll go ahead and tell you right now, you will not have to do any FIFO or LIFO calculation whatsoever.
Good deal.
Yeah.
Makes life easier.
Yeah, we'll leave those concepts for 120 in terms of inventory costing, and we'll stick to our manufacturing cost concepts for this piece.
Okay. That's good. Thank you.
Yeah.
I do have a question.
Sure.
I'm not sure which number this is, but it is on Chapter 2.
Okay.
And the question is, how much is the overhead application rate if BAR bases the rate on direct labor hours? And
Okay.
it gave me some numbers of expected, actual, and then the budgeted overhead and the actual overhead. So I can give you those numbers. I don't know how they got the per hour amount.
Okay, so here's expected overhead, actual overhead.
Yeah, and then budgeted overhead, actual overhead.
Okay, so what do we have in expected overhead?
30,000 labor hours.
Okay.
And then they had actual was 28,000 labor hours.
Okay, yeah, I remember this one.
Okay. And then the budgeted overhead was 900,000
Okay.
and the actual overhead was 870,000.
Okay. Okay, so one thing we want to keep in mind here, right, is in this problem, the first thing it asked was for our predetermined overhead rate. So our predetermined rate, POR, is always 100% of the time our total estimated overhead cost, divided by our total estimated activity based on our allocation base, whatever that may be. In this case, they told us that was labor hours.
Okay.
Okay. So always, always, always total estimated cost for the entire period divided by total estimated activity. Okay, so in this case, we're saying, well, our total estimated cost was this $900,000, and we expected to run 30,000 labor hours. Okay, so that's $30 even per labor hour. So that would be our predetermined overhead rate.
Okay.
Now, one thing that problem didn't ask, but others did, and it's certainly worth talking about now, that's how we always determine our predetermined rate, right? Again, total estimated cost divided by total estimated activity. How do we always apply our overhead? Oops. Applied overhead. So that's always, go ahead.
Applied overhead is what they actually, I guess, used.
Half of it is, yeah. So it's always our predetermined rate, right? That rate we've estimated times our actual activity.
And you would define that at the end of the period, right?
Yes. Or during the period if we're using, kind of our job order costing back in Chapter 2.
Okay.
We may apply overhead during the period on the basis of when we're determining labor for a job, if this was the case.
Gotcha. Okay.
So again, applied overhead always based on our actual activity factored by that predetermined rate. And remember, since we have estimates involved here, we're probably never really going to hit the nail on the head in terms of our actual overhead cost versus our applied. So that's where we run into over or under applied overhead. So let's use this example to continue that. So if we applied overhead here, we would say, again, our predetermined rate was $30 a labor hour. Mm-hmm. Our actual labor hours were 28,000. So we would apply 840,000.
Versus your estimated 900,000.
Right. We estimated it'd be 900 for the year. We've applied 840.
So you're underapplied.
Or what? Sorry?
Underapplied.
Yes. But remember, the comparison is between my applied and my actual.
Not your budget.
No, my budgeted, yeah. So we actually incurred 870 in costs. I applied 840, so I'm under applied by 30,000.
And not to get too granular, but in that case, that $30,000 would be a debit in what account? That would be in the in a labor account of some sort, right? Where would that $30,000 be sitting? Yeah,
it'd be in our overhead account. So if we looked at our overhead account right here, right, I stretch this out. So my debit side in my overhead account That's my incurred or actual overhead.
Okay.
My credit side is what I've applied. Okay. So if I'm under applied, it means I've got 30,000 sitting over here at the end of the period.
Yeah.
And remember, with overhead, we don't just let it sit there, right?
Yeah.
We clean that up at the end of the period. So whatever balance I have in overhead at the end of the period, I need to get rid of it.
And that's where it goes to cost of goods sold, right?
Yeah, exactly. So here I'd say, well, I need a $30,000 credit to overhead. So my journal entry is going to have to include a $30,000 credit to overhead, and then that debit to cost of goods sold that you just mentioned, Terry, for the same $30,000.
Gotcha.
Excuse me.
Yeah, that makes sense.
Okay. So three kind of items here. First being predetermined rate, always calculating that as our total estimated overhead costs divided by our total estimated activity. Second, whenever we apply overhead, we need to make sure we do that using our predetermined rate factored by our actual activity. And then this third piece, the over versus under applied, we need to make sure we're comparing applied overhead versus our actual or incurred. And that's what will determine whether we are in fact under or over, or neither. It's possible, not likely.
Now, sort of going back to this control thing and the zero balances from that, but clearly manufacturing overhead has got to be one account that has a zero balance at the end of the period, as illustrated here, if you've got some sort of a this $30,000 balance. But what other accounts absolutely need to be down to zero at the end of the period?
Yeah, so in our manufacturing context, factory labor fits that bill too.
Does it? Okay.
Yeah.
That's got to be applied, okay, somewhere.
Yeah. So factory labor, remember, we're hitting factory labor with debits every time we're incurring new labor cost.
Okay.
But I need to make sure I'm applying or assigning that labor cost to work in process during every period.
Gotcha. Okay. Makes sense. Okay. Good. And certainly the raw materials inventory just can maintain a balance. I mean, just because it is what it is. I mean, you'll simply buy materials, it'll accumulate there as debits in the account or an inventory, and then you pull it out and apply as required. But certainly at the end of your period, you can have, $50,000 in widgets and raw materials sitting there. That's not
Yes, you can, sure. And in fact, if you look at the balance sheet of a manufacturing company, you'll often see all three types of inventory: raw materials, work in process, and then certainly finished goods.
Exactly.
So they're all inventory accounts or all assets.
And they can all have a balance.
Yes. Yep.
That makes sense. Good.
What else do you guys have?
I got another question.
Sure.
On the test that we're getting ready to take, are we doing a lot of these type problems, like working them out?
You are, yeah.
It's a high percentage of them.
It sure is, yeah. Yep. So I'd say, the homeworks are certainly good practice. The textbook practice problems, the kind of the recommended ones from the back of the notes, those are good practice. And then also those separate test prep documents that I put out there. And for chapters 1 through 3, they were all combined into one document in the chapter 3 folder. Hopefully you all have seen that.
Mm-hmm.
Yeah, so those are very good examples of how a lot of those concepts have been kind of integrated or batched together for purposes of creating a test problem.
Okay. Good.
What else can I answer for you guys?
I'm still looking through my notes here.
Okay. Was someone else starting to ask one?
How many cost of goods, like manufactured schedules, are we going to have to do?
How many cost of goods schedules did you say?
Schedule to do.
Yeah, so I am going to expect you to know the components and put together a rough cost of goods manufactured schedule, and then also piece that into an income statement.
Okay.
Yeah.
So like the on, I guess like number 4 on the chapter or on the practice test.
Okay. Yeah, let me pull that up.
Hey, Linda, go check our buddy outside, please.
Oh. Chapter 3. Okay, and let me change my screen share over here when this opens. Okay. Okay. Oh, yeah, here we go. Okay, so this is definitely a very representative example of the type of thing you would be expected to piece together here. So let's take a look at this one. Oops. Okay, so this said, given the following data, put together a cost of goods manufactured schedule for this year, and then an income statement for the same thing. So our cost of goods manufactured schedule, what did we always start with on that? What do we always
What do we
Work in progress?
Yeah, we always start with our beginning work in process, or work in progress, whichever you prefer. So we knew that to be 25,000 bucks. Okay, so beginning of the period, we had 25,000 in goods that were partially finished. What do we always add to that?
Direct labor?
Yeah, so I heard direct materials, I heard direct labor. What else?
Manufacturing overhead.
Overhead, yeah. So direct materials, we want the amount used, right? So given what I know here, how can I determine what I actually used for this period?
Your beginning plus your total add minus what was there at the end of the period, right?
Yeah, so I had to do a little extra math here. Hang on, sorry about that. So I started with 40,000. I purchased some amount. I don't know what purchases are, right? Didn't tell me that. But I did know that my total raw materials available were 200,000. Okay. So I started with 40. I had 200 available. I must have bought 160.
Okay.
I also knew that my ending balance, was 20,000. So what must I have used?
180.
Yeah. 180,000. So I can stick that off to the side there, or I'll highlight it for now. I also know I need some direct labor cost in here. What costs do we see that are direct labor? Salary of plant supervisor, is that direct labor?
No.
No.
No. How about salary of assembly line workers?
Yes.
Yeah. Make sure we don't have any others here. Yeah, we're good. So my direct labor, 200,000 just from the assembly line workers. I also need to factor in my overhead costs. So what overhead costs did I have?
You had utilities.
Yep, I had utilities for 10. What else do you see on there?
Supervisor?
Yeah, there's where my supervisor fits in, right? Any indirect labor is going to be overhead, so 40,000 there.
How about the factory insurance?
Yes. Insurance, 5,000. Anything else?
Depreciation?
Yeah, let's not forget that one. And remember, our general rule, or one of our many general rules, I guess, if it's happening in or around the factory, so it's attached to the production process, it has to be one of those three. Okay, so if it has anything to do with our production process, has to be either direct materials, direct labor, or manufacturing overhead. Okay. So our total overhead, if we subtotal those up, 65,000. Okay. So then we'd normally have our total manufacturing costs as another subtotal. So again, that's the direct materials plus direct labor plus overhead. So that came out at 445, I guess. The 180 in direct materials used, the 200 in direct labor, and then the 65 in overhead. Okay. So if I add together my work in process beginning, 25,000, and my total manufacturing costs of 445, I'm at 470. What do I call that subtotal? It's got kind of a name.
Progress.
Yeah, that's my total cost of work in process, we call it. Actually, we can move that off to the side like that. So again, that's just my beginning work in process, goods that were partly done at the beginning of the period, plus all of my current manufacturing costs. So how do I get from total cost of work in process down here to cost of goods manufactured? What else do I need to include or exclude?
Do you include the finished goods?
Not finished goods, not yet. We're going to use that on the income statement, right?
Okay.
Out the work in process from the previous year.
Yeah. Or yeah, from the end of this year, right? So it's my total cost of work in process minus what I had at the end of the year here of 50,000. That must be the cost of goods that I manufactured during this period, right? That's what we're shooting for on this bottom line. We're saying, what's the cost of those goods that I finished this period? So total cost of work in process for the period, the 470, minus those goods that still weren't done at the end of this period, that tells me my cost of goods manufactured, again, for this period. So 420,000. So I'm going to move this down, actually, and we'll do our income statement right up here. So in terms of an income statement, now that I know my cost of goods manufactured is 420, I want to make sure I integrate that at the appropriate spot on that income statement. So income statement would always start with what? Before we even talk about costs.
The sales.
Yeah, so we had sales of 975. And what would we subtract from that? Sales minus...
They're expenses.
Yeah, so normally since we're manufacturing, we'd start with cost of goods sold. So we know my cost of goods manufactured, but how do I get to my cost of goods sold? Still need to do a little more math there, right?
Mm-hmm.
Now we need our finished goods, right? I want
Okay,
to
so
say...
you take the ending, subtract the beginning?
Yeah, so take your beginning, right, what you started with in finished goods.
Okay.
So what did I have available to sell at the beginning of the period? Plus, what do I add to that?
What you finished with in December at the end of the period?
Not yet.
You went out of your total cost of your manufacturing, that number.
Yeah, there's my cost of goods manufactured from my schedule of cost of goods manufactured.
Minus your finished goods inventory.
Yeah. So we call this, right, cost of goods available for sale, beginning plus what I added to it this period. And as Terry just mentioned, if we then take out our ending finished goods, 15,000,
So 605. Yeah.
that tells me my cost of goods sold is at 605. Okay. So sales minus cost of goods sold, call that gross profit. And that's what, 370? Okay. And then we can worry about those other expenses, right?
Get your net, yeah.
Yeah, so we also had some period costs, right? Those selling and admin expenses. We had advertising of 10,000. How about sales commissions? Did we include that here?
Yes.
Yeah. Any cost of selling or administrative function. So 15 more. And then that was it. So if we take off those selling and admin expenses from gross profit, there we'll get net income.
Interesting.
So generally that's the flow we'll follow. Sales minus cost of goods sold to give us that gross profit number, since we are in the business of making some goods here. Then we'll take out our selling and admin costs, our period costs, to get to that bottom line net income.
That makes sense. Multiple steps, but it's
Yeah.
yeah.
Yeah, and depending on the problem, right, if we're thinking about it in terms of the problem itself, we may have some combination of these given and not given, right? So understanding the relationship between them just as important as kind of that initial.
Now, now, if you can go down a little bit, just a quick question for you. The understand the WIP again was 25. The direct materials was what? How much was that? 180?
It ended up being the 180 in terms of what we actually used. Yeah.
Okay, that's the key number. 40, 60, 200, and then less 20 got you to 80. Okay, so that 445 was 25, 180, and 200. Is that right?
The 180, the 200, and the 65. Yeah, the 445 is my total manufacturing cost, which is just the direct materials, direct labor, and overhead. So that would not include the beginning WIP.
Okay. So what numbers is it in particular? So the 445 is 200 plus what else?
Yeah, it's the 180 in materials,
right?
The 200 in labor, and
Okay.
then that's 65 in overhead.
That's 445. Got it.
Yeah.
Okay.
Yeah.
Gotcha.
And then, Terry, when we add that to the WIP, then we get that total cost of WIP.
Right. And then ending the WIP is your cost of goods manufactured. Okay, I got it.
Yeah.
And that's factored in on the top part to get to your total cost of goods sold.
Yep.
Okay. Makes sense. Okay.
Yep. So that's the flow, and as long as we understand the relationships, we're okay. Because all we're saying really, not all we're saying, but what we're saying is, what did I start with in goods that were partially finished?
Mm-hmm.
What did I spend or incur to add to that manufacturing process during the month? If I combine all that mess, that's what my total cost of work in process is, minus the stuff that still isn't finished at the end of the period, must be the cost of the goods that I did finish during the period.
Sure.
Because that's what we're really trying to figure out there is what's the cost of the goods that I finished and moved over to finished goods that I can now sell.
Professor Day,
Yes, ma'am.
I'm going back to the income statement. You had me up until we got to the gross profit. I'm not understanding how we got to 370,000.
Okay. Sure. So gross profit is defined just really as that revenue above and beyond the cost of our goods sold and no other expenses included. So if we take our total sales here, the 975, minus that cost of goods sold that we had determined to be 605, that's our gross profit of 370.
Okay.
Yeah.
Thank you.
Sure. Any other questions here on either the income statement or the schedule of cost of goods manufactured?
I'm good. Makes sense to me.
Okay.
Yeah.
What it's worth.
Okay. Anyone else? That's, I mean, this problem right here is a very good one for practice for the test. I will certainly tell you that. Yeah. Anything else there at all?
No, I'm good.
Okay.
Yeah. Not referencing a particular question, but just something in general. I presume we'll have a lot of tests, or part of the exam will be journal entries, just sort of moving the cost along the process here from, when you purchase the raw materials, you do a debit to your raw materials inventory, then you credit it out to work in process, and you accumulate your labor charges in a debit format there, then you sort of credit that out to various jobs. So will there be a lot of need to sort of identify the various journal entries?
Yeah. So in terms of a percentage-wise of the problems and stuff, I'm not sure, to be honest, but it's certainly a critical component, yeah.
Okay.
Yeah.
Good.
So while I have that sitting right in front of me, again, this is from that practice document. These are pretty good examples of the types of costs I'd expect you to be able to, illustrate with those journal entries. So for example, this second one says raw materials of 6,000 were requisitioned to the factory, total 6,000. An analysis of the rec slips indicates 2,000 of those materials are considered indirect. So what do I debit as a result of this journal entry? Or what do I debit in that journal entry, rather?
Work in process and overhead, right?
Yeah. So which costs go to work in process?
6,000?
It'd be 4,000, 2,000.
Yeah, careful there. Not the full 6. We want to send the direct materials directly to work in process.
Right.
And we want to send the indirect materials over here to manufacturing overhead, at least for the time being, right? Because remember, they don't sit in there forever. That cost doesn't sit in there forever. We eventually assign it to work in process, but it sits temporarily in overhead.
And you would also credit, raw materials for 6,000.
Yeah, exactly. Take the total out of raw materials for 6.
Yeah, makes sense.
So our direct costs, again, always to work in process. Indirect, always to manufacturing overhead. And the same is true of labor costs as well, right? Same principle applies.
Labor would always move into the, so.
Yeah, so if, for example, here, right, we said, well, let's do this one too, and then talk about implications. So if we said incurred factory labor of 50,000, of which 30,000 was paid in cash, 10,000 paid in the next payroll cycle, and the rest as a result of payroll taxes payable, what would I book here?
You debit factory labor for the full.
Yeah, so I debit labor for 50,000, the factory labor. What would I credit?
Well, you're paying them, so you're getting rid of cash.
Yep, so we paid some of them in cash. We're also paying 10,000 next payroll cycle.
That's wages payable, right?
Yeah, or some variation of that's fine. Wages payable 10. And what do we do with those payroll taxes?
It's payroll taxes payable.
Yeah, we haven't paid them yet, so we'll stick that in another payable. Now, what if I said, let's see, what if I said all labor costs were incurred to work on job, no, hang on a second, sorry. 40,000 of that cost related directly to job 123, and the other 10,000 to general factory use. What would I book to assign these labor costs accordingly? 40,000 related to job 123, other 10,000 for general factory use.
Well, initially you would credit, factory labor $40,000.
Okay.
And you would debit job 123 for $40,000. The $10,000, or you could actually do the whole $50,000 in one shot, and then 40 to job 123. And the other $10,000, I'm not sure exactly where that would go.
Yeah, so when you say 40,000 to job 123, how do we indicate that?
Is it work in process?
Yeah, it is. So there's 40. So that means the other 10 has to go where?
Indirect labor?
Yeah, and what do I call that? Or what type of cost is that?
It's overhead, right?
Yeah.
Okay.
Yeah, so similar deal here is what we did with materials. Again, we want to make sure we send our direct labor cost directly to work in process. And then that indirect labor, we're going to park that temporarily in manufacturing overhead. And again, we make sure we take the total out of that factory labor account. Okay, so direct costs always directly to work in process. Indirect costs always get parked in overhead temporarily.
And where does it end up ultimately? It's parked in manufacturing overhead temporarily.
Yeah, where does it go for manufacturing overhead?
Yeah.
Anyone want to weigh in on that one?
No idea.
It gets to work in process eventually, right? Remember, if we think about our overall cost flow, we've got raw materials, factory labor, manufacturing overhead. Anything on this side, so to speak, is our cost accumulation. We always assign to work in process first. Okay, so remember, if we're requisitioning materials, some might get parked here temporarily. Same with factory labor if we're talking about indirect labor. But everything eventually gets assigned to work in process. If I have an arrow I can draw here. Where does it go from work in process?
Eventually the finished goods.
Yeah, and then where?
Cost of goods sold. But I guess it'll probably find its way there on the overhead bucket through your what am I trying to say here? What's in that little formula, like the $30 per hour, whatever? You find a way to sort of move it over there, right?
Yeah, exactly, Terry. So periodically, yep, go ahead.
No, I was going to say, I was saying that inartfully, but yes, at the end of the period, I guess it's got to move out of the manufacturing overhead bucket into the work in process, just as a function of your formula, of the allocation.
Right. So we always apply, again, we always apply our overhead on the basis of that predetermined rate times whatever actual activity we had.
Okay.
And that's exactly what that's doing there. So if I said, for example, show me the journal entry for applied 10,000 in overhead cost to job 123 in March. What would that journal entry look like on March 31st? Applied 10,000 in overhead cost to job 123. What account am I increasing by doing that?
You're increasing your WIP account for job 123.
Exactly. So I need to indicate that work in process is increased by 10 because I've applied this new overhead. And where have I applied it from?
Your manufacturing overhead.
Exactly. Okay, so this is a very common journal entry for us too. Anytime we apply overhead, whether it's specific jobs in our job order cost system, like Chapter 2, or whether it's for the period, like in our process costing system in Chapter 3, same deal, right? We're always applying from the overhead account to that work in process account. We always want to show that that cost has been added to the cost of our work in process.
And depending upon your POR and the amount of activity, here's where you can get yourself in a position where your balance in the manufacturing overhead account is either a debit or a credit, and then you got to make that adjustment, right?
Exactly. Exactly. And again, that's all because this POR is based on an estimate, right? So it's our best guess at what our total overhead costs for the period are going to be based on our total work. But it would be practically impossible for us to estimate that to the penny, right? So generally we'll have some balance to clean up in overhead at the end of the period.
Exactly. Okay. That makes sense.
Okay.
Like a general question. When
Sure.
you're, what is it called? Like the cost convert, or like units of production, is materials always 100% unless it's like specified?
Oh, yeah, so equivalent units there, which we had somewhere down here, for example. So it's quite often that materials are 100% because in most production processes, materials are introduced at the beginning of the process. Right, we're usually not adding materials as we kind of move down the production line, if you think of it like that. But it's not always the case. I would say that from a kind of a problem-solving standpoint, it's always going to be indicated whether that's the case or not.
Okay.
So you won't have to kind of wonder. But yeah, again, in most cases, materials are at 100% once that process starts. While we're on that subject, how would I calculate equivalent units of production for January in this problem that I've got my cursor on right here?
The 10,000 plus 5,000 in the working process.
Yeah, so 10,000 transferred out plus 5,000 in ending work in process times, and here we knew materials were at the beginning of the process, so if we're doing materials, 100%, so that would be equivalent units of 15,000. And if we're doing conversion, still the 10,000 transferred out, still the 5,000 in ending work in process, only this time factored at the 40% completion rate. Okay, so equivalent units of production, we never care what the beginning work in process is, only care what we've actually transferred out, and then what's sitting in ending work in process and how done that is with respect to both materials and conversion.
So in that case, you wouldn't sum those two numbers, would you? 15 plus 12 for a total of 27?
No, remember we always want to say this is 15,000 equivalent units with respect to materials. Oops.
Okay.
And this is 12,000 equivalent units with respect to conversion.
And there's no hybrid calculation, put them together
No, nope. Always calculate them separately.
separately.
Because when it comes time to do a unit cost calculation, we want to do that separately as well. Remember, equivalent units is really, what we're trying to do with it is measure how much work we've done in terms of 100% completed units.
Sure.
That's why we factor by that completion rate all the time. We say, well, okay, I've done 10,000 that I transferred out, and I've got 5,000 sitting there, but they're not 0% done. I have done some work to them. They're about 40% done, so I've done the equivalent of 12,000 units, again, with respect to conversion.
Exactly. I follow. Yeah. And that really just plays on the process side, really not on the job side, correct? Under the process costing?
Yep, correct. Yeah, we wouldn't have that type of scenario with job order costing because we're assigning costs to an individual job as it's being worked on. Yeah.
Sure. Okay. 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 Good.
What else?
think I'm in pretty good shape
Okay.
because I've talked a lot. Like more than I should.
Anybody else? Questions, comments, concerns?
We can just throw some other questions that we may come up with out on the discussion board, right?
Say that again, Terry. I'm
So
sorry.
some other questions that I come up with, I'll just throw them out there on the discussion board for,
Oh,
know.
sure. Yeah.
I'll think
Absolutely.
there's only been a few out there on that, so
Yeah.
kind of underutilized, but I'll, jump in and add some commentary and some questions on some of that.
Okay. Other questions out there? Anything from chapters 1 through 3?
I'm pretty good. Here's kind of an interesting question. I presume that the exam is all just, pen and paper. There's nothing we're doing in Excel, is there?
Correct. It is pen and paper. Yeah.
That's what I thought. Okay. Which is fine. Just put in a calculator, right?
Yes. Yes. Do not forget your calculator. And remember, you can't use your cell phone as a calculator. Because the testing center will definitely not let you take your cell phone out during the exam.
Yeah, that's a no-no. Okay. No worries. Yeah, I think I'm in good shape.
Okay.
Am I the only one left here? I see.
Let's see. Where's my participants? There's still a few out there. Yeah.
Okay.
Deborah, Mercy, Heidi, Katani. How about you all out there? Katani, Heidi, Deborah, Mercy, any of you? Questions, concerns? Complaints?
When is the first day for the exam again?
It's available. It was available today. Was the first day,
Today, okay.
and then it's available all the way through next Friday, the 13th.
Gotcha. Okay.
Yeah.
Good deal.
Any other questions going once? Twice?
Hearing none, as we say, right?
Sorry?
I said hearing none, as we
Yeah.
say.
Okay, well, if you don't have any other questions, I'll certainly let you go for the evening. And again, if you do come up with some, more than welcome to post them on the discussion board so I can answer them for everyone. Or if you forget and send me an email, that's fine too, and I'll try to remember to post any questions I get that way on the discussion board as well. So you can peruse that if you'd like to kind of look for ideas if you need to.
Sounds good.
And again, I'd just say make sure you do work through some combination of the homework problems, the textbook problems, and then this big practice test document. Again, those are all problems that are very representative of the types of things you'll see on the test.
Sounds good.
Okay. All right, y'all.
All right. Thank you much.
Sure thing. I'm here if you need me. Just shoot me an email.
We'll do it.
Okay.
Appreciate it.
Have a good night.
You too.
Bye. So my recording, I think, worked this time. Stop recording.